Hi, I'm Ed Baldwin with your weekly wrap-up for Friday, March the 11th. Well, the markets paused and had a correction this week. The wheat markets were lower after last week's multi-day limit up moves. The corn and soybeans traded both sides of unchanged to finish up for the week, while canola continued to close higher every day. The war in Ukraine has many traders concerned about Ukraine's ability to grow and harvest a crop in the coming year. Ukraine is the fourth largest wheat and corn exporter in the world and will be missed. The equity markets, well, they continue to struggle this week with concerns over growing inflation and interest rates rising. Our May canola contract this week, well, it was up $56.40 a ton, and it closed at $1,131.20. The May canola was up this week on the further gains that we saw in the vegetable oil prices. And with the shutdown of Ukraine, which is the world's largest producer and exporter of sunflower seed oil, the world is scrambling to source alternate supplies. The May soybean contract was up this week 15 cents a bushel. It closed at $16.76. The May corn contract gained 9 cents over the week and closed at $7.63. We're going to start looking at the July futures for the wheat contracts at this time, as all the grain companies have basically changed over to July to set their pricing in the elevator system. So our July Chicago wheat contract this week lost 98 cents over the week and closed at $10.77. The July Kansas City wheat contract was down 94 cents a bushel and closed at $10.81. And the July Minneapolis spring wheat contract was down 68 cents for the week and it closed at $10.53. The wheat markets turned lower this week as the speculative short positions were finally able to exit the market. Once this occurred, the market pulled back. Traders will now focus on the war disruptions and the drought conditions in North America. Our Canadian dollar this week gained 15 basis points and closed at 78.63. Meanwhile, the crude oil contract was down $6.48 a barrel, correcting this week over last week's huge gains, and it closed at a 109.20 per barrel. For next week, well, USDA did release their March supply and demand report this week. The USDA lowered U.S. corn and soybean ending stocks on the higher exports due to the war in Ukraine. As well, USDA lowered the South American soybean production by 10 million tons. Trade will now be looking for the USDA's prospective planting report, which is due out on March 31st. So we're going to look for canola to continue to move higher next week with a retest of that 1143.70 high that we saw in the May contract. And for spring wheat, well, we'll look for spring wheat prices to find a foothold down in this $10 to $10.50 area and to turn back up towards the $11 in the July contract. I'm Ed Baldwin with your weekly wrap-up for Friday, March the 11th.